Welcome back to the channel, YouTube. This is Invest in Yourself. My name's Cameron. Today I'm going to make a little different video and open up a little bit of transparency of one of my personal accounts. It's a Roth IRA account, and it's not a traditional 401k. As you didn't know, I am in the military, as I've said before in some of my way back videos in the beginning. I say way back, but this channel's not that old. But again, I'm in the military, and we do have pension plans, but I do invest in a 401k, which obviously a Roth IRA 401k. And if you're not tracking what, I don't really want to get in the videos breaking down what a 401k is. If you're not tracking, it's just a kind of like a life cycle fund, something you can invest in over as a long term till you get to a retirement age of 59 and a half, 60 years old, and how you divest those certain funds in that IRA. Set you up for most people's retirement would be this 401k, because a lot of businesses now don't offer pensions. So this is how a lot of people take money out of their monthly checks and invest into this, so they can have something as basically when they do hit that retirement age, depending on what years they've planned to retire, they have a good nest egg to fall back on and something to supplement their income, hopefully when they do pull Social Security. But going into this, this is called a Thrift Savings Plan, a TSP account, and it's for uniformed service members and your people who are retired service members as well. And it's broken down to many different life cycle funds and individual funds, and you get to kind of choose a percentage of the accounts. This is not like a brokerage fund, like I can sit there and pick individual stocks. That's kind of the downfall of this TSP, but you get to pick like index funds overall. I can pick they won't say an S&P 500 or the Dow 30 or the NASDAQ, but it'll be like an F fund or a C fund or an S fund, and we'll get into what that is and the life cycle funds. But let me know what you think down in the comments of this video. Just want to show you another one of my investments accounts and just putting my money where my mouth is. So I'm just not preaching to the choir sometimes and not doing stuff that I preach. So let me know what you think down in the comments. And do you have a 401k? Do you have a traditional 401k, a Roth IRA, or brokerage accounts? I think you should be multi-diverse over many different areas of investing. So please, again, let me know in the comments, and we can open up dialogue and get some of your opinions. Make sure you pop a like, subscribe, and share with a friend. Again, so we'll get into looking at the life cycle funds. Life cycle funds, in short, YouTube, is just whatever your plan to retire, retirement age. That's where you want to divest in these life cycle funds. And as the further you're out from retirement, a little bit more risk on you can take. And all these life cycle funds are mixed between the G, F, C, and S fund. And basically, we'll get into those later, and I'll break them down that basically ties back into the life cycle funds. But as we're younger, there's a little bit more risk on taking into the life cycle funds. It's not a bunch of risk, but it's still well diversified in these funds. And as you get closer to retirement age or the time you retire, it gets a lot of less risk on. So they're going to end up diversifying in securities and fixed incomes. When it comes to fixed incomes, that would mean like bonds overall. It'd be more of a safe bet to protect your money from volatility. But that's a short note just on the life cycle funds. And looking at some of the individual funds, we'll go over here to this to give you kind of a visual. See, as you can see, the G fund is just a government securities investment, basically just giving you a little return better than inflation. They see have a little breakdown, the risk on. The C fund is basically matching the S&P 500 and gives you kind of that whole market matching like an index fund. I funds, international stock funds, like an iShares International Fund or a Bloomberg International Fund. It's just basically overall index fund matching. So there's other funds too as well. We'll put up here an S fund. Let me take this off. So S fund, and take the I fund off and put an F fund. So we'll go to the S fund. Basically, that's just showing the Dow 30 and it gives you an overall index match of the Dow 30, and the F fund obviously is a fixed match, and it's basically bond indexing with the aggregate Barclays and the Bloomberg. So that's something that's more of a fixed income. You want to keep steady money inflow when you start getting close to retirement age. But that kind of breaks down the overall funds in the TSP. And the real reason why I want to make this video, probably if I didn't elaborate in the beginning, I'm sorry I didn't. But the biggest thing I wanted to get into is that I recently put a request in to change. Initially, I had 80% of my funds diversed into the C fund, which again, to go back over, is 80% in matching into like an index fund of the S&P 500, and 20% into the S fund, which is Dow 30. And recently, I'm starting to see different companies come about. Since we have a supposedly vaccine we'll probably get within the next 6 months to a year, mass inoculation. Hopefully, keep our fingers crossed if everything comes to fruition, and all these different other companies start saying they have a certain percentage rate better than what Pfizer reported. But I think it was time to start upping my percentage into my S fund, which it really doesn't match the Dow. I'll show you right here because it says that, but as we know, so you can see the top 50s in the C fund. We have, this is what it's a composite of the C fund we were just looking at, where I had 80% of my funds. It was Apple, Amazon, Alphabet, Berkshire Hathaway, Nvidia, Visa, so forth and so on. And those are, all those are great, medium to large cap businesses in America, and safe plays. But I feel like now we'll go down to the S fund, which they're saying it's a composite of the Dow, but we'll really quick to debunk that really quick when you see this. So here's the top 50, which I can't get 50, I get about 20 of them to show. Look at the fund. So the first one's Tesla. That's funny. 50 of them. And this is supposed to mimic. Remember, it said again, let's go back to this one. It's supposed to mimic. Take this off and this off. Where is it at? Right there. So C fund, obviously S&P 500 in a match like an index fund. And the S fund, small cap stock index. I don't know about you, but I wouldn't call Tesla a small cap. And for 100%, they're not in the Dow Jones completion. But I think that's just I think what they mean, because maybe I'm misreading it, the Dow Jones plus U.S. completion total stock market index, including maybe things in the NASDAQ or other small caps. But again, when I saw this, I was like, oh, this is what they're diversing in. I was like, oh, Tesla, Square, and these are the companies I'm very bullish in my individual stock accounts. And I was like, well, overall, some of these companies are very innovative and disruptive. And I'm like, why do I have 80% of my portfolio, especially index-wise, in that? Now I know, and I found this out the other day. So that's why I'm going ahead and making those certain changes into my thrift savings plan, my IRA, taking the account from 80 to 20, from the C to S, to 10% allocation out of my C fund, out of the S&P 500 index, into an extra 10% into the small cap index fund, making a 30% weight into that fund. Because overall, YouTube, I firmly believe in the next 6 to 18 months, when we have mass inoculation, vaccine, the pandemics, I wouldn't say behind us, but we're getting at least 4 steps forward, that some of these small cap stocks are going to see greater gains than some of the medium and large cap stocks that have seen a lot of those massive upward movement in the last 8 months. I think we're going to see better return on our money in small cap, especially like the Russell 2000 and other companies that fall into that branch. But overall, YouTube, I really hope you enjoyed me open up my personal account about my Roth IRA and showing you what my overall, what I'm thinking in the future, what I think can happen, and me allocating different funds into small cap stock indexes instead of being so heavy and diversified in the common stock index. And another thing I want to leave you with at the end of the video is just telling you how important with this channel, investing in yourself, is when it comes to diversing in different asset classes. As you can see, I have a index fund type of Roth IRA. I have a brokerage account that I do stock picking. I do crypto. I have gold and silver. I have real estate. I'm a firm believer to be a well-rounded, diversified investor is going to protect you and your money and your mental sanity in the long run, and you can sleep better at night. And instead of putting all your holdings in one basket, I mean, does that work sometimes? Absolutely. If I could have had a crystal ball and put 100% of my allocation money and liquidity in Tesla, obviously I could brag and say you don't need to do A, B, and C. If that happened, I hit a home run and got lucky, and I had full faith in Tesla, which I did, but I only allocated 20%, 25% of my money because I still want to protect my top side. But again, I hope you enjoyed this video about the thrift savings plan and opening up my Roth IRA. Let me know down in the comments what you think overall, and do you have a 401k? Are you bullish on index fund investing, and what do you think overall in the upcoming 6 to 18 months in small cap stock indexes? Are we going to see an influx in positive gains compared to the mid-size and large cap stocks compared we've seen the last 8 months? So let me know, but maybe pop a like at the video and subscribe. And again, thank you so much, and I appreciate every one of you. And like I always say before, remember, always the most important thing is to invest in yourself. Bye bye.